So Kevin, I guess we'll go in this order. Kevin is VP or Head of Distribution Marketing at Blue. Blue is a very interesting InsurTech here, which was co-founded by, I think initially was Aviva. Did I get it correct? Aviva, Tencent, and Hillhouse. So super interesting. I think they're doing some really interesting stuff. Kevin is looking after distribution. And then we have Michele. Okay, sorry. It's Italian. My Italian is not very good. And Michele Grosso is CEO of Democrance. He's coming from Middle East, Dubai. They're really interested in InsurTech there. Also, technology basically underpinning of InsurTech distribution. So I think it's really good to have you with us here as well, kind of bringing a little bit of an extra perspective outside of Asia. And then we have Evan Thorpe from 630 Ventures, a big InsurTech investor, also working very closely with RGA as a reinsurer. So we have very, very good perspective from all three gentlemen here. And I guess to get us started, maybe I'll ask about just one very quick example from each one of you in terms of this new model of kind of distribution in the InsurTech world. So maybe Kevin, we start with you, and then we just kind of keep it punchy.
All right. Thank you. Thanks, George. I guess to share a bit, I guess from a digital insurance point of view, we always run into a challenge of how do we capture our customers without using an agent. Because traditionally, particularly in the Hong Kong market, people buy insurance through agents. They're educated or incentivized in that way. But how do we change that model in a sense that we're able to capture customers at the point where they're interested in prior to that? And a lot of this comes into using a lot of different data of how to understand our existing customers, and also leveraging a lot of different ecosystems. For example, some of these platforms that has been presented today, for example, Portfolio, or even Ativo just now presented on using HubSpot to captivate customers that has these awareness, and using these introduction points to introduce insurance products in that sense, and then earlier stage, or even using wellness programs like, for example, earlier presented mixed care and similar to actually captivate these customers. So I think a lot of InsurTech today is actually enabling this, but more it depends on the market. For example, in Hong Kong, where the majority of customers are more keen on agents still, and very low knowledge in insurance stuff, particularly in the middle or lower income customers, where they're still being educated through agents. And so how we change that really depends on a lot of the digital insurance or virtual insurance companies like us, and others, as well as sort of similar health or related ecosystems to actually bring that up. And I always compare this with insurance companies or insurance industry between with let's say travel or investment platforms. Because if you imagine about 10, 20 years ago, whenever you trade a stock or when you buy an airline ticket, you still go to an agent. But that has changed in the last 10 years. And that changed not only through platforms, but also through education of customers.
Got it. Okay, cool.
I'm Michele, I'm CEO of Democrance. We started in Dubai in 2015. We helped insurance company increase their digital sales and accessing customer segments. We work with 25 insurers in 16 countries across Southeast Asia, Africa, and North America. I'll bring a couple of examples of those. Two examples, if you actually allow me. I think in Asia, it's quite different, life insurance and non-life insurance.
Yeah.
So one example of, life insurance typically do not have API, for the reason that Kevin just mentioned. So it will normally use Democrance API so to quote and bind their products on third-party distribution networks like banks or like aggregators. For example, we worked on this with AXA, who sell their products by different banks and aggregators like Policy Bazaar. in non-life, the situation is a bit different. Some insurance companies, they have APIs because they already sell via this distribution network. So they would use the Democrance platform to connect to this digital ecosystem to access new customer segments. For example, again, AXA, a different market in the Philippines, they use the Democrance platform to sell via two non-traditional channels. The first one is grocery, which is an online platform for retailers to restock their inventory and at the same time to buy insurance and can get insurance for free if they qualify the loyalty. Another traditional channel is Bridge Access, which is also in the Philippines, and it's basically an online aggregators for employee benefits for corporate employees, including access to insurance.
Cool, thank you. Evan?
Thank you, appreciate it. Yeah, as George pointed out, 630 Ventures, we're headquartered in the United States, but we invest globally. InsurTech is among the categories that we look at. And we certainly share the perspective of many investors out there of the impatience around InsurTech as a category becoming more or less attractive in the global investor scene. This is to say that there's a certain impatience around what does InsurTech 2.0 look like, or maybe it's InsurTech 2.5. I think just the ambiguity around that speaks to the lack of consensus around where InsurTech can find a home in global venture investment. To answer your question, George, around successful distribution opportunities and what we see there, we kind of think of it in a couple of different strands, both from kind of an investment thesis viewpoint and also from a insurance industry viewpoint. Part of that is the kind of horizontalification, if you will. It's a made-up word, but hopefully it serves its purpose, to be able to describe the way in which horizontally oriented data, SaaS, analytics, or other tech capabilities can be used in insurance use cases. This is kind of harkening back to, like probably my favorite catchphrase out there in InsurTech investment, which is that sometimes the most interesting insurance investments are not InsurTech companies, but rather companies that have developed certain horizontal capabilities or data capabilities that are particularly relevant to an insurance use case. And in this case, what I mean in distribution would be the distribution not just of the insurance product, but the distribution of the tech product around it. An example of this, to kind of talk our own book, and Peter from CoverGo was here earlier, but I think he left a little bit earlier. But CoverGo recently launched a partnership with a large carrier here in Hong Kong that involved the distribution of their no-code platform into group health policy distribution so that employers who are in turn distributing insurance to their employees can leverage those horizontal no-code capabilities. Michele, I'm sure you can relate to this in offering best-in-class no-code capabilities in your company as well. That's an example of where what you're distributing is not just the insurance product, but the technology to accompany that, and we see great potential in those and other use cases.
I think that's an interesting point. So kind of you bringing out the point about enabling distribution for the traditional players, and also I guess we're talking about like the pure play distribution plays that are InsurTech themselves. So maybe as we kind of double click on that, and in the interest of time, I think we probably just compress it a little bit. If we now look about the example that we saw earlier, right? We talked about the ZA Bank being kind of really a digital play, and then Generali coming in, doing online to offline components there as well. So we have both of these components kind of very clearly present in the future of CVD distribution of insurance. What's your view in terms of how the future of insurance distribution looks like? Is it going to be purely digital? Is it going to be a hybrid? Is there particular products that fit better with one? Or what's your view? Kind of where is the spectrum of the distribution?
If it's up to me, of course, it's going to be purely digital or do. But to be honest, like realistically, it's going to be more of a hybrid model. I think even a lot of these traditional insurance companies are moving into that direction as well. And with that though, the difference between hybrid and I guess pure digital, it also really depends on the product, the complexity of the product, because just on one point, simply from an underwriting point of view, that will complicate things from hybrid models and or pure digital channels, I guess. So that's why we design relatively more simple and more flexible products, where then more traditional insurance companies are able to cater customers that require products that are relatively more complex, that can cover more benefits and so forth. So I think that is going to be more so of the future trend in that sense.
Makes sense. So are you opening any coffee shops anytime soon? I'm kidding. That's a different intro. Okay, cool. Michael?
Yeah, I agree with Gavin. I think so. There is this myth that the digital distribution will kill agents. I don't think it's true. If it's done well. I'll bring you one example. We work with Manulife in Philippines and Malaysia. In Philippines, so simple management of Manulife, they want to sell term life and products like A&H, which are more profitable. The agents, which is the vast majority of sales institutions in the Philippines and actually across Asia, they want to focus on investment and savings, which have a higher ticket size and commission. So what we did with Manulife, we had them launch the Manulife shop, which is basically a digital shop in which agents can explain very quickly the simple A&H and term life products to their customers, but they can actually spend time upselling those savings and retirement face to face, and then after the meeting, they send a WhatsApp message to the customer with a link to purchase the term life and or A&H policy by themselves on their phone. That link has actually a unique referral code, so that at the end of the day, the agent also gets the commission from that single product. However, he spends his time selling higher ticket product.
So it is a hybrid, basically, that it looks like it's gravitating to. So, Evan, I guess it leaves you kind of a nice place to wrap up, because as you see, you think about it and you say, like, do I really want to invest in the huge armies of agents running around in InsurTech?
It's a really good question, and yeah, thanks for teeing it up so neatly. There's definitely a high level, it's been said many times, and I'm certainly not the first person to utter it, so I'll just parrot it instead. Software is eating the world, and insurance is no exception to that trend. But certain sectors where maybe it's more akin to kind of eating a salad, where you can kind of start in any number of different places, the way in which software, I believe anyway, will consume insurance is more like the way one eats a sandwich, which means you have to start from the outside and move more towards the inside. And agent-based distribution channels, I would consider being closer to the middle of the sandwich rather than being out in the crust. So what this means from an investment thesis viewpoint is we tend to look at these areas that are along those edges, such as things like, so here's a company that we haven't invested in, but I'll plug them anyway. We at least haven't invested in yet, maybe sometime in the future. There's a company in Europe, very interesting, called Diesta. Some of you may have heard of them. They're not so much an InsurTech company as they are a payments company. They're a payments processor that enables agents, carriers, MGAs, et cetera, to get paid faster. So this is payments technology that's being implemented in the insurance world. And one might say, well, are they going to be the Stripe of payments and insurance? Someone else could say, Stripe should be the Stripe of payments in insurance. But I think we'd all agree, most of the, I shouldn't speak for everyone in the room, but I'm sure that given the amount of expertise in insurance that's present here today, can appreciate that there's a lot of very kind of quirky specifics to insurance that would require any founder who's going to launch a company that isn't an InsurTech pure play company, but rather like a data company or a fintech company or a payments company specifically, to have enough domain expertise to be able to not only appreciate the quirks of the insurance industry, but also to identify where those gaps can be closed. So I guess to sum that up, look for those opportunities around the edge and disrupt from the edge towards the middle. and work your way from those efficiencies that sit well within the ecosystem of brokers, agents, MGAs, and the rest of the value chain.
Awesome. I like this analogy of the salad versus the sandwich. I think this is the first time I've heard of it.
I'm still workshopping it, so work in progress.
I think that's a good one. Okay. All right. So I promised you guys a quick panel, and I think I've delivered on that. I think, again, the purpose of these sessions is really to keep it very punchy and to kind of give you something that for you to think about and take away. And hopefully this gives you a little bit of like, oh, okay, so there's something interesting there. And try to catch this guys later on if you want to find out more. It's supposed to be a preview. The main dish is coming afterwards. So thank you very much for your time, and thanks for the speakers for this really good insights.
Alright, so we're having our closing keynote by Victor Ip. And let's give it a round of applause. Thank you.
So, good afternoon, everyone. Thank you, ITC, for giving me this chance to conclude this wonderful gathering, wonderful meeting.